The so-called Trump trade rolling on. It does take us to our talk of the tape. What is in store for this record-setting rally? Let's ask our panel. Trivariate's Adam Parker, JPMorgan Asset Management's Gabriela Santos, and Robinhood's Stephanie Guild. Adam, a CNBC contributor. Everybody, as you can tell, is at Post 9 today. Gabriela, I'll come to you first because I haven't heard from you since the election seemingly changed kind of everything in this market. How should we view what's taking place and what we think could still happen?
So we're just putting our pencils down here in our year-ahead outlook. And coming into the election, we were calling it out of the cyclical storm. So really this idea that before this, we had been talking about the economy normalizing, rates normalizing, earnings growth normalizing, and it just being kind of about rebalancing portfolios. Now we've tweaked that title to be out of the cyclical storm and into the policy fog. I do think up until the end of the year, markets are going to continue to cheer this removal of the actual election result uncertainty. But then into next year, it's all about the three S's. What's the scope of policy? What's the sequencing of various policy measures? And, of course, what's the starting point here in terms of valuations in the economy?
Is it really a policy fog, or is there clarity now? Because we know that former President Trump, soon to be president again, wants to re-up the tax cuts. He's going to do everything in his power. He's going to think that's going to just stimulate more growth.
I think that there's still quite a lot of questions around the scope and the sequencing. So what exactly is the scope of these tax cuts? Is it just extending the TCJA expiring provisions? That's one scenario. Or is it adding on top of that additional corporate and individual tax cuts? And that matters in terms of projections for the deficit, economic growth, and inflation, and hence rates across the curve. There's also this big question of tariffs, right? What exactly is the scope of that versus what's been proposed? And is that something that this new administration starts to implement right away? Or is it maybe something that's used as a negotiating chip? And hence, you have more limited impacts on inflation, the dollar, and rates.
Stephanie, what's your view?
I actually think the markets will continue to rally. We're right at the door of what I thought was a 20% probability of getting to 6,000 on the S&P. Right now, though, I think we could get to maybe 6,300 over the next 3 to 6 months. But I'm actually a little more positive on mid caps rather than large caps, mostly because slightly better valuations, not as risky from a higher interest rate environment that you could see in small caps. So yes, there is a policy issue maybe coming, but I think the biggest thing I'm watching for that is the direction of interest rates, because that could really slow down the economy.
How much have the goalposts moved in the last five days or so? Hasn't even been a week since we knew the results, but I mean, have the goalposts really moved that significantly? Because the market is clearly placing its bet that the answer to that question is yes.
Yeah, I mean, if everything is a distribution of outcomes, the distribution got shifted to the more bullish side, with the biggest difference in my mind being the specter of more M&A. And you saw the M&A firms have a huge day Wednesday and beyond.
Continuing. The financials are the strongest group today. It's the banks, it's PE firms, it's all the ones who play right into the wheelhouse about what you're talking about.
Yeah, we wrote Morgan Stanley KKR on day one. To me, that's incremental. We have clients, we sell our content to law firms and boards and management teams of companies, as you know, and they're super busy. I mean, these people are not, planning on having a good Thanksgiving, in terms of wasting time. People are very busy trying to figure out, can they close deals? There's a lot in the pipeline. So that's a little bit of a maybe frosting on the cake of the bull case that maybe wasn't in the bull case a week or two ago. And I think once you see some mid caps get taken and small caps, it brings up the valuation for stuff in the same industry, and that's kind of how you get a bit of a more bullish scenario. What we wrote in our notes Sunday was, do you sell the inauguration? I mean, everyone's universally bullish on now to the end of the year, and at some point maybe you do have to get a little bit of clarity on what some of the policies are going to be, what it really means for earnings out 2-3 years. But I do think for now the bulls are in charge.
That's been the thought, right? You have sort of a free pass, if you will, from election day to inauguration day, and then maybe all bets are off for a little while once we get through the mud of policymaking and all of that stuff, which comes with some innuendo and unknown.
And I do think investors will have a little bit to chew on here in terms of policy, in terms of some of these cabinet and advisory appointments and nominations, right? So eyes on who's going to be the Treasury Secretary, who's going to be at USTR, at Commerce, sends some signs. But yes, probably through Election Day, there's a little bit more of less of a focus on the policy. And for us, we are still quite bullish when it comes to the actual equities and corporate credit environment, where I think the outlook particularly change is much more on fixed income and FX. So we had expected interest rate volatility to come down. Now it's likely to remain elevated across the curve. We had expected the dollar to continue to weaken. Now it's probably going to stay elevated and volatile. Versus for equities, unless there's truly a massive scope of tariff increases next year, I think that's still an environment it can move higher.
How do you